struggles,
innovation,
going all in,
not holding back,
mindset,
being a leader,
paving their own way,
putting the real in real estate,
listing legacies, selling luxury. You have The Vault.
unlocking conversations in real estate today.
We're live with The Vault. I'm your host, Jessica Hastings-Lesperance, and let me introduce my magnificent, wonderful, I'm running out of taglines, co-host, Alexa Miller. Alexa, on prompt, who do we have on the show today?
Hello, everyone. Welcome back to another episode of The Vault. Today, I'm very excited to welcome our guest, Austin Simon. Welcome, Austin. Thank you for joining us. Let's start with you just telling us a bit about yourself and your background.
Hey guys, thanks for having me. I appreciate you having me on. So a little bit about myself. So I'm a mortgage broker slash pastor. So I've been doing mortgage brokering for just over a year now. And I've been absolutely loving it and want to continue to help people. I'm passionate about helping people and helping them reach their financial dreams and also attaining house dreams. So this has been the perfect industry for me. I get to meet lots of amazing people, but that's kind of a little bit about myself.
Awesome. I have so many questions. What are you at?
What am
Sorry?
I?
First question.
My first question. Okay, my first question is, how long have you been a mortgage broker and what led you into this career path?
Good question.
So I've been a mortgage broker for just over a year now. I've been doing mortgages for about just over two. So I worked for a company called Meridian Credit Union. Do you guys know what Meridian Credit Union is?
Yes, we love them.
Yep.
So I actually hated working for them. Not to talk crap about Meridian, but it's just the branch. It depends on the branch that you're working for. Some workplaces are great, some places are not.
Yep.
And it was just the time that I was in. But I worked for the only credit union or only bank in Ontario that the branch level had dealt with mortgage brokers. The guy who owned it had a specific deal with Meridian as a franchise. And so he directly dealt with mortgage brokers. If you know anything about the broker channel, is that brokers don't deal with the branch level at all. But at the Meridian I was working at, we dealt with brokers specifically. So I was pretty much sat down and was like, okay, you're going to process mortgages. And so that's kind of what led me into learning the mortgage guidelines and how a mortgage actually worked. And so I decided while I was learning to do mortgages, I had quickly realized what made a good broker and what made a bad broker. And as I was working with these brokers, I was like, okay, if some of these bad brokers can get deals, I think I can absolutely blow the water out of becoming a mortgage broker. And so being a mortgage broker had ticked a lot of the boxes that I really that meant a lot to me. So I'm at zero cost to a customer. So I can sell myself really well because I'm just here to help people and help people achieve their financial dreams by giving them funds. So I hopped into it and haven't looked back.
Wow, love it. Good story. So what did you do before that? Like what led you into becoming a mortgage broker or working in the banking industry?
So my grandmother actually was a mortgage specialist.
Mm-hmm.
And she worked as a mortgage specialist for Meridian. So she's the one that got me a job at the Meridian as a financial services representative. Before then, I went to Bible college for 3 years, which also leads me into my other career as a pastor.
Right. Awesome. Wow.
That's
So you're
amazing.
busy.
Yeah,
You're busy.
that is busy.
I am busy. I keep myself busy.
Yeah, it's important.
Yeah.
So we stay focused.
Mhm.
What would you say the number one thing you've learned in your mortgage business? Like, what's the most common thing you're noticing lately? Because in real estate, we're in a shift market. So from your mortgage perspective, what are you seeing right now?
People can't qualify. The mortgage rates are so insanely high right now that they just can't qualify. We see like fixed rates are heading up towards 7%. And because of the stress test that we have, people have to qualify at 9%, which is insane on these huge mortgages. And so we see the real estate industry, we see the mortgage industry currently really slowing down for a lot of people. Like people's businesses were already struggling through this year, but now we see that especially the people that had their hands under their butt or just weren't really putting the plow to the field are really struggling this year.
Yeah.
Right. Yeah, it's sad actually.
So do you think those rates are going to go down? I know it's very open-ended, but what are your thoughts?
Yeah, it's inevitable that the rates are gonna come down. Just because like we as an economy cannot sustain. Like I talk to people almost every day that they're struggling with the food costs, with inflation, with gas, and then also people's mortgage payments are super high. Like Canadians just can't afford this or sustain this. So eventually we will have a recession. But eventually the rates will come down. So when we have a recession, the rates will come down because they'll want to put money through the economy again to get it restarted. But right now, the Bank of Canada is trying to force a recession by raising rates. So once they have the recession, once they meet their inflation of 2%, then you'll see rates starting to come back down again.
Right.
Right. Yeah.
Wow. Yeah, it's a hard time for a lot of people, and we're experiencing that right now.
Yep.
Mhm.
And it's hard being in the industry that we are because we're probably all empaths, or some of us are. So you really feel for the people.
Yeah.
What are some suggestions or recommendations that people can do to ride this out?
To ride this out. So a thing that I'm going to be starting to do over this next week actually is part of my brokerage. We're doing kind of this campaign for saving a collective of people of $25,000 a month. So saving people a collective of $25,000 a month. So budgeting, like people, like a large portion of people aren't on a written budget. I'm personally on a written budget and will live and die by a budget. People need to be on a budget. It's like you need to know where every dollar is going because every dollar is going right now. So people need to be on a written budget, and I'll scream it from a rooftop.
Yeah, 100% agree. Anything we do with our coach, we have what's called the hub, and everything is in that. We do our budget for the year. If something comes in, something comes off, we're changing the budget. It's on, it's off. I 100% agree with you. And it's 30% more up to happen if we write it down.
Mhm.
Yeah, and 80% of finances is behavior. So you have to fix your behavior in order to fix your finances. 20%, like I look at people all the time. I get to look under the hood of people's finances, and I see people that can afford homes, that make enough money, but they can't save for a down payment, or they've racked up their credit card bills and they make $200,000-$300,000 collectively. So it's not the amount of money that you make, even though it does help. It's not the amount of money that you make, it's the behavior that which you associate with money.
Yeah, so true.
It is. And it's really hard to change your habits too, unless you're really focusing in and narrowing it down. Can you talk about how would you, or like with your down payments right now, are you finding some people, like you said, who do qualify, but they don't have enough funds? So how do you help restructure them? And then what is kind of the common down payment right now?
The common down payment that I've been finding is like we see more people being at the above the 20% mark, just because those are usually the people that we can get exceptions on, that we can adjust the stress test towards. Like banks are more adjustable to people who place over 20%. So when you place 20% down, there's a lot more options for you. But when you're an insured deal, so anything lower than 20%, the guidelines on those are very, very strict. So there's not much you can do to get around that when you have lower than 20%. Now, us in Ontario, it's very difficult to have 20% unless you're selling your house and purchasing another house. So figuring out different ways to structure the deals is for like people I would recommend who are under that 20% down payment mark. Don't add on any unnecessary debt. So that's consumer loans, consumer payments on your credit card. So don't rack up your credit card bills. One of the biggest downfalls for people in qualifying is actually auto loans. So if you have a car with an auto loan, for every $100 you lose out on a large chunk to what you can qualify for. So car payments can definitely decrease your purchasing power.
That is really good to know.
Yeah.
Yeah.
Wow.
Is there any other tips you have kind of like that where we just don't realize that?
The car loans one, like the debt one is the big one, because as a mortgage broker, we are specialists in debt. And so we want to maneuver debt in a way that that benefits you and helps you. So line of credits will generally be lower payments than your car payment, because a car payment is fixed. So a car payment can be $200, $300, $400 a month, but you could be lending on a line of credit that's that's 20,000, and the payments could be like 100 or less than that. So just knowing where your debt is and not racking it up in certain areas is super beneficial.
That's a good point. Yeah.
Also,
So-
if you're in a government job or a stable job, banks love you. If you have a consistent T4 or a consistent paycheck, if your salary, like, the banks will absolutely love you with a great credit score.
Yeah, they don't like us self-employed people.
Yeah. That's why
No, they don't like us too much, but there are programs out there that are for us that you can get around.
Yeah,
That's true.
that's true. And in the real estate world, we have to show 2 years income before we can try and mortgage something.
Yeah, I think that's all self-employed,
But
right?
they can use your, like, if you've been in the real estate industry for over 2 years, they can use what's called stated income. So they can take your close to your top line instead of taking what you actually brought home
Well, that's
at the
good.
end of the day.
Oh,
So
I didn't-
if you're making 200,000 and you expensed everything down like 150,000, we could use close to the $200,000 mark.
It's good to know.
Yeah, that is good to
That's
know.
helpful. So what we're seeing right now in our real estate world is, like you said earlier, someone has to sell a house in order to buy it. That's a lot of conditions right now. Are you seeing that a lot on your end? And are they working? Are you seeing these clients able to make that transition?
Uh, it's actually, and I'm sure you've seen this on your guys' end. I'm actually currently working with a client who, unfortunately, I have to get private financing for, because they had their house up for sale and they purchased a house, and their house it hasn't gotten any offers. And so they are scrambling, trying to find financing because they're not getting any offers. They've brought down their purchase price on the house, but they just don't have any takers. So when it's closing at the end of the month, and nobody's buying their house, so they're using the funds from the sale of their house to purchase the next house, but they haven't sold their current house. So we're having to do private financing. So
There's
it's a
lot of
struggle.
buyers now.
So to
Yeah.
clarify, they already purchased another home without selling their current home.
Exactly.
Oh, okay, so to all the new realtors listening, don't let your clients do that.
Yeah, it's a big no-no. At least
Yeah,
we advise our
that's
clients
scary.
not to. In
Oh,
fact,
man.
we get them to sign a form acknowledging that.
Yeah. Well, hopefully it works out for them. I mean, yeah, you said you got them private money?
Yeah, so we're working on getting them private financing, where they have to finance the entire property to bridge finance it till they sell their property, which it costs a ton of money.
Yeah.
So it's not something that I particularly enjoy doing. I generally don't do these types of clients. But it got tossed on my plate from a realtor that I'm close with. So I'm doing it, but it's not a good situation.
Yeah.
Yeah.
And what are, just for my knowledge, what is a private
Yeah.
lender
And do you
charging
have
right now?
your private lenders in-house, or there's a third party that you work with?
Third party. So as a mortgage broker, we work with tons of lenders. So there's
Mhm.
there's so many lenders, it'd blow your mind. So you have what are called your A lenders. So what we use is Scotiabank, TD, or monoline lenders that fall in that. So RMG, First National, and your credit unions are all A lending. Then you have your alternative lenders. So they have different regulations. You have to have 20% down to use them. Their rates are a little higher, but they're easier to approve people under. And then we have your private financing. So this is investor money that is pooled together for people's mortgages. So you usually have to have like 35% down, just because they have to, or 25% down. It depends on the private lender, but you have to, like, they are adjusting their risk because it's private, like they're taking care of their investors. There's a lot of risk that can be involved. So they mitigate it by the amount of down payment, but it's investor pooled money instead of the bank's general money. So they'll take care of their investors.
And it's usually interest rates are a lot higher with private.
Yeah.
correct?
So much higher. So like so let's say A lenders are at like 6% right now. Your alternative lenders are like 7.5%, 8%. Then your private financing is 10% right now.
Yeah, I figured that. Wow.
What are you seeing in private financing? Are you seeing people able to, pay it back and shift to the regular mortgage or halting on it? Like what's the trend?
Yeah. So whenever we go private financing or even alternative, there has to be what we call an exit plan. So there has to be, because private financing, you're only doing for like 6 months to a year.
Right.
And then you need to have a way to move them to alternative or to an A lender, because you don't want people paying 10% for a number of years. People do, because they just can't qualify under an A lender, because like their regulations for A lenders are getting tighter and tighter. They're not going to get easier. So we see more people going towards alternative and more people going towards private financing, because people just can't qualify anymore. So I hope that answers that.
Yeah. I just had a question and I lost it.
It'll come back.
It'll come back.
So what would you say your biggest success in your business is right now?
I honestly don't have like a biggest success, to be honest. Like I'm the type of person that just likes making minor adjustments, minor tweaks along the way. Like I have milestones that I hit, and I honestly don't get too excited about them. I don't know why. It's something I'm trying to work on, is getting excited about them, because it's good to take the wins. But I honestly, like, for me, the biggest thing is making the minor adjustments. Like when I'm working with a client and after the deal funds, is okay, what worked, what didn't work, what can I adjust, what can I make better? So that minor tweaking is what moves me, and it qualifies as success for me.
That's good.
Yeah.
All the little things do matter, and they do add up over a period of time.
Yeah. What about you guys? What's your guys' biggest success in real estate?
Oh,
I got a lot.
Yeah, where do we start? Jesse, go first.
So podcast, our book.
Yeah, we're writing a book.
Oh, you guys have a book?
We do. It's coming out next year.
Good for you guys. That's awesome.
Yeah, we have lots of fun projects. The team, everyone's made huge successes, not always monetary, but just trucking along. People have babies soon. Lots of fun
Oh
stuff.
my gosh.
Yeah.
So how many people do you have on your team, Jessica?
We have 10.
Oh my gosh. That's awesome.
Plus admin. There's admin too.
Yeah, I think
So we have lots of support, and yeah, it's a big.
That's cool.
Big
Good
family.
for you. So you're killing it out there.
We're trying. Where are you, for anyone listening that wants you to help their clients or them, where are you located out of?
I'm located at a Newmarket, but I can service all of Ontario.
Right.
So because I'm completely online, which my older clients don't particularly like me too much, which I've come to understand, come to know. I work very patiently with them if they're willing to go the online route. But everything I do is online.
Yeah.
Right.
Yeah, I get that. I just thought of my question from a few minutes ago. So we're going to go back to what we were just
You're
talking about.
good.
So can you touch on people that are refinancing? So people that
Mhm.
bought, let's say in 2021 at 2%,
Yeah.
that have to requalify now at 7 or whatever, the 6 or 7. Like, what are you seeing? Who are the people you're working with right now in a slower market?
Yeah. And can you add to that when properties were appraised during the COVID market and now they're not appraising the same amount and they're struggling?
Yeah, that all ties together. Yeah.
Okay, so that's a lot to unpack.
1 minute.
So so I'll try my best in unpacking that. So refinances are like they're really dead right now. You might get them here and there. But refinances like during COVID were like is like so many refinances, it's unbelievable. But right now, just because of the rates, people aren't really refinancing. And also we've had changes in the mortgage industry that are coming in November that you're only able to do a combination of 65% of the loan to value, so the value of your mortgage to your home, of 65%. So it was and still is right now 80%, but it's going to 65%. So for refinances, especially if people got in at 2021, people want to keep their 2% that they've had. They want to keep it as long as they can, and they want to hold on to it because if they want to, if they want to requalify, when people were qualifying at the 2%, they had to qualify at 5.25%. But now, since we're at like the 6%, heading towards the 7% now, people are having to qualify at 8 and 9%. So it's like if you want to do a refinance on your home or consolidate some debts, it becomes very very difficult and expensive, especially if you're holding on to a 2%. So people are holding on to that 2% until rates start to come back down.
But what about the people that are forced to refinance? Like their term is up.
Okay, so those are two different terms. So you have a refinance, which is acquiring new money, and renewal. So renewal is when you're at the end of your term. So the average term is 5 years that we have here in Canada. So you can get you can get 1, 2, 3, 4, 5, all the way up to 10. But people don't do 10. So you come to the end of your 5-year term, you can renew within 6 months up to the end. So 6 months prior, you can start looking around. But so right now we're seeing that people are because of the regulations that we have, and it's really they need to change these regulations because it doesn't make sense for people who own homes, is that if you want to, so say you're up for renewal in December, and you want to shop around for the lowest rate right now. You're at Scotiabank and you just want to go get a lower rate. So what you have to do in order to get a lower rate, let's say at a monoline lender at First National, you'll have to requalify for your mortgage. So after 5 years, if you're down from 800 to, let's say, 725, you qualified at the 5.25% before, but now you need to qualify at 8 or 9%. And people are stuck in in the lender that they're currently with, because if you stay at the same lender, you don't have to requalify. But if you want to move your mortgage, you have to requalify for the mortgage.
Yeah. I can see how that would create a hard situation.
Problem.
Yeah, so it doesn't help consumers at all. So like the bank, so say we can get you a rate if you switch your mortgage, we can get you a low rate of, let's say, 5.8% or 6%. The bank, because you have no choice to move, will hand you a 6.4% or 6.5% because you have no other choice.
Right.
But to stay, because they know you won't requalify. So
Yeah.
Mm-hmm. True.
That makes sense.
It's crazy out there in the real estate world.
It's not a fun landscape, but I know there's a lot of it's not like preaching a ton of I'm not trying to preach a ton of negativity, and that's not how I like to view life at all. But it is it's difficult for everybody right now, and everybody's grinding to get every single deal. But there's lots of there's still people buying, and there's still people refinancing. There's still people doing business. It's just we have to put our hand to the plow and go looking for it. Like COVID was easy times, and now everybody's got to learn to go and get business.
It is. What did we say? It's 3-to-1 lead generating right now, and 2-to-1 sales. That makes sense. It's 3 times in a lead generating, and it's twice the amount of sales for one deal.
Mm-hmm. And if COVID is anything, it's that when you think the world is going to shut down and real estate's going to tank, and then it doesn't, people are always buying and selling.
They are always.
Doesn't matter what market you're in.
Yeah, no matter which way it's going, it's people are always going to be looking to buy. We see that real estate will probably go down over the next 6 to 8 months.
Mm-hmm.
But it'll real estate is, and you can ring the bell, is that it's going to go up no matter what. So it might take a dip, which it most likely will take a dip, but it's it'll come back. But what are you guys kind of doing to lead gen right now?
Yeah, everything is a lot digital right now.
Yeah. I personally don't door knock or cold call. Yep. But a lot of people are amping that up. Mm-hmm. I do a lot of, through social media. That's my main lead gen source is through social media. I'm just not a cold call
events
person. Yeah, we do a lot of events.
A lot is digital.
Yeah,
digital
we do. Yeah, major digital.
Well, you guys have the podcast, you have the book.
Yeah.
So you guys have built a brand, which is awesome, which is what I'm currently trying to do.
Mm-hmm. Yeah, we're placing ourselves as the credibility and authority in the market.
Yeah, for sure.
And anyone listening, that's what you need to do. So.
Yeah.
Well, that's what I put all my time and interest into right now, because I also don't care to do cold calling, and we do a thing called with warm leads, or social media is a great way to get warm leads. And so I've just put everything into doing social media, into posting, into creating a community, and into getting my leads from social media, because it's just so powerful when you utilize it.
Oh, so much.
Yeah.
It's the never ending thing, man. It's just amazing.
Yeah. That's why I don't do the old school stuff, because it's I'm sure it does work for a lot of people, but it's just not my cup of tea. And I found I get success in social media and just networking, and we're also from a small area, so we know a lot of people already, and we just are constantly out in the community, and that's what works for us. So
you got to find what works for you and do that.
Yeah.
So Austin, can you tell us where our viewers can find you?
So where I'm hanging out right now is on Instagram. So if you want to go to Simon Mortgages, you can find me on Instagram. You can DM me. I'd love to chat with anybody. Being on social media is just about being social. So DM me, say hi. I'm willing to talk to anybody. Just find me there.
Awesome. Well, thank you so much for joining us and for all your insight in the mortgage world. We appreciate you coming on and chatting with us.
Yeah, thank you.
Of course. Thank you for having me.